Boom! What's going on, guys? Welcome in to your Energy News Beat, episode number 154, here on this gorgeous Friday, November 6th, 2020. I am your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Denver, Colorado, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, oilandgas360.com, Stuart Turley. How you doing today?
It's a beautiful day in the neighborhood, and you got a hall pass.
I do have a hall pass to give out, guys. You made it. The presidential election might not be over, but this week is. We'll give out our hall pass at the end of the show, guys. Me and Stu got a pretty good show for you. He's got some stuff in the international news desk. There's some interesting earnings that come out. We'll talk hurricane losses. Cheniere comes out with some earnings. We see how that midstream stuff plays out. We'll cover some of the stuff that's happening on the U.S. equity markets. But first, guys, just subscribe to this YouTube channel, Oil and Gas 360-Enercom. Subscribe to the Energy News Beat. We really appreciate all the support you guys are getting. As I mentioned, it's day 4 of the presidential election, and really the outlook from the market's perspective is they're pricing in right now with Joe Biden victory and a Senate majority being held by the Republicans and a shrinking majority for the Democrats in the House, which means pretty much gridlock, and that's what markets like. We've seen markets up 4 straight days now. Today was a little choppy of waters, mostly because I think a lot of that non-blue wave action has already been priced in, and now the markets just want to know who's going to be president. They're pretty much flat right now. Half a percentage point on the upside for the S&P, 0.08 percentage points for Nasdaq. Dow Jones down 0.2 percentage points. Excuse me. On the bright side, unemployment did fall from 7.9 to 6.9. I don't necessarily buy that number specifically because you have to take into account there are people who have just stopped looking for work at this moment because of the fact that there's some unemployment runs for 99 weeks. You don't necessarily have to always look for a job. The people who are included in unemployment are the only people actually looking for a job. But the number that I do like, though, is the U.S. economy added 638,000 jobs versus an expected 530,000. So that's good to see, at least putting America back to work. On the crude oil side, not good, down to 37.18, 4.51 percentage points on the downside. Really, this is off the back of European countries looking like they're going to go back into lockdown. Denmark and Greece specifically, which is about 48 million people, are about to go into a 2-week lockdown, Stu, which is, that's probably 600,000 barrels in terms of demand that we can see wiped off the side. And so not good on that front. Long-term crude outlook in that 12-month strip down to 40 or down 2.5 percentage points. Natural gas, again, bullish draw in U.S. LNG stocks yesterday, but overnight weather turns very warm, and that long-term weather impact turns warm, and that's what's driving markets. We're down 2 percentage points today, $2.88. It can't be it's got to be the weather, because that's the only bearish thing in the market right now. If we do see production rise, that's production coming back online, specifically in the Permian. Once we see rig counts going up, also means gas prices go down. It's kind of funny because we're getting all this excess gas. That's one of the leading indicators here. So when we see rigs continually getting added, we might be able to see that. So we did see an increase of rigs this week, which was good to see. Part of the reason why that number's down. But again, it's a lot of these weather models, 288 for natural gas on the front end of the curve, back end of the curve, $2.99. XOP is our EMP securities contract, 40.95. That's down 3 percentage points. OIH is 1.75. That's down to 195. Some of our biggest movers on the equity markets, guys, on the downside, High Point Resources, they're at 9%. Gulfport Energy, big news, we'll be covering on them, 9 percentage points on the downside, down to 25 cents. And Falcon Minerals Corporation, they're down 10 percentage points, $2.24. Big movers on the upside, though. Whiting Petroleum, the new version, they're up 5 percentage points. Qatar Energy, they're up 6 percentage points. And Valco Energy was up 9 percentage points. Guys, we really appreciate Data Gumbo, who is an award-winning technology company that provides blockchain technology to automate your smart contract. Data Gumbo's smart contracts offer a new approach to commercial relationships, one that reduces friction and delivers streamlined operations, transactional certainty, and cost savings. Every transaction is accurate and certain via their Gumbo net. Check them, all things Data Gumbo, at www.datagumbo.com. Stu, what do you got going on the international news desk today?
Oh, hey, I just got a couple stories today, but both of them are from our buddies in Iran. And the first story up out of the box, Venezuela oil flow sags. Iran offers to help. which also means more production concerns for the poor folks at OPEC trying to weasel them in. Diesel cutoff, they're going to be bringing in more tankers of diesel. The crude exports plunged roughly to 350 barrels per day, half of the September level. It looks like Chevron still holds a 30% stake in the 170,000 barrels, but they're going to be done by December 1, no matter who or what happens. So anyway, Venezuela's getting a handout from Iran. The second
talk about two stellar governments giving each other handouts. Holy smokes!
Oh yeah, I'd like to be patting somebody on the back on that.
I'd like to be the bank that's on those credit swaps.
No, I would want to make sure I got a tetanus shot before I shook their hand.
That's true.
Here's the one. The presidential election has not been decided yet, but Iran's already deciding on how they're going to go. Iranian parliament orders increased uranium enrichment. This is one to watch. Here's why. The Iranian parliament yesterday approved a bill requiring the Atomic Energy Organization of Iran to produce at least 120 kilograms of 20% enriched uranium annually for the nuclear site, which is also weapons available. They haven't even finished counting the votes yet, and they're already acting like Joe's back in action. So we don't know who's going to elect. It's going to be interesting in foreign policy.
And we'll be following everything. I mean, all we're telling you is what I think the markets are telling us, and I think they're prepping for a Biden presidency, a Republican Senate, a shrinking majority in the House, which means absolute gridlock, which is generally good for the markets. If there's no tax policy that's really changing, which is where a lot of these long-term institutions keep their money, I mean, it is bullish for the markets. I mean, it'll be interesting to see what happens when they actually affirm President Biden, or Vice President Biden as when he actually officially, when he gets called for him, because we'll probably see a slight dip, just because if you go back and look at historical numbers, Democrats don't do, the stock market does not like when a Democrat takes over in the executive branch, solely because of the fact that fiscal policy might tight. Loose monetary policy is what those markets like, and that tends to favor the Republican side of the candidates. When we move over into the U.S. shale market, couple things here. First, rig counts, as I mentioned, were up 300. That's a good number to see. We've been in that 286, 289. Good to see those numbers up for, like I said, especially in the Permian. We saw 6 rigs come on in the Permian. So to give you guys an idea, that's where a lot of this natural gas stuff. So be watching that. If we see Permian rigs come back online, that's just bearish on the price of natural gas. Even if we see a lot of this, even on top of the demand coming back, and even in light of the seasonals, we also saw ducks increase a little bit. So just unbelievable. Let's quickly move into the earnings. We'll cover one more story. Let you guys get out of here. First, Cheniere, guys, they're down. They're up 1.17 percentage point, pretty much off the back of the fact that they're going to complete one of their Corpus Christi liquefied natural gas plants in the first quarter of 2021 versus the first half of 2021. They actually missed on revenue, still did about 2.4 billion in revenue, but Street really liking the fact they're going to be good at that LNG plant on earlier and producing. Moving over to Enbridge, they actually, decently, they reaffirmed their guidance, which is part of the reason why the Street didn't like it. They're down 2.4 percentage points off, missing on their earnings, but also the fact that they're not cutting CapEx in the future, which means they're probably still going to continue to lose money in the next 2 quarters. That's probably what that means. And that part of it is because they're setting up sort of the same number of liquefied natural gas as their buddy Cheniere is over on the other side. So they're trying to play a little catch up with a lot of their refining business. They also dove deep into ESG for Enbridge. They really want to take, and speaking of something that Enercom is big into, this renewable natural gas stuff. That was something big that got mentioned by their CEO on the call, that they're looking to shift some of this stuff to renewable natural gas. So we'll be watching that specifically. They're also going to continue to do share buybacks as long as the stock price gets worse. They see that this is a gross, the management team sees their stock is grossly undervalued, and will continue to buy back. So that's going to at least help depressing prices. They're down 2.4 percentage points. We'll be following the number there. Our friends up at Northern Oil and Gas, gotta love a Minnesota-based company getting in on the Bakken right here. Couple things. We like them. One, because I think they're operationally sound. I think they're a slightly undervalued stock. They were $1 about 6 months ago now, or they not $1, but they're a lower-ish stock, which actually makes money. Give you guys an idea. Their borrowing base was $660 million. A pure Bakken player was reaffirmed at $660 million. They were one of our to watch fors. We weren't sure what was going to happen. A pure Bakken Three Forks player, Stu, gets their $660 million revolver reaffirmed. That gives them about $110 million worth of borrowing capacity. They're expected to be able to reduce that by 15 to 30 million due to some preferred stock sales. They have 1.8 million on cash and about 90 million of total liquidity. They did raise another 100. They're about to raise another 130 million in 6 unsecured notes. They reaffirmed their guidance 190 to 250 million at their best case 40 plus WTI. What I also love about these guys and what the street really likes is their hedges. Get this, Stu. Here's their average weight per barrel. Quarter 4 2020, $58. Quarter 1 2020, 56. Quarter 2 2021, 56. 54 in quarter 3 and 54.44 in quarter 4. Unbelievable strip pricing on this. They've been busy, hopefully, with our friends at Aegis. I don't know who does them, but for all your hedging needs, give them a call. That's really what I like on that point. That's why I think I think it's partly why they're trading fairly flat right now, but that's good to see, especially having a Three Forks Bakken player. We've been covering a lot of these hurricanes, and thank goodness this most recent hurricane looks like it's going to spin and move elsewhere and not really hit anything. Give you guys an idea. Genesis Energy is a private offshore oil and gas company that works in the Gulf of Mexico. They came out and said normally every year they expect to lose anywhere between $8 to $10 million due to hurricane evacuations. This year, Stu, Genesis Energy said up to $50 million in losses due to storms. Now, multiply that on a factor of somebody like a Shell, a Murphy Oil, an ExxonMobil. Holy smokes, that's probably a lot of moolah loss specifically to these hurricanes. It's just an unbelievable number.
I'd hate to see their insurance premiums next week.
Yeah, no kidding. I wonder if they got. I wondered if they have. Can you short weather futures? Is that how they get around it? Do they have weather futures they short?
I'm not sure, but I don't want to be their insurance guy.
No, you definitely don't want to do that. Do we miss anything? I mean, it's a Friday, Stu. We're going to let people get out of here. Hopefully, by the time we come around for our Energy News Rant podcast in the morning, Monday morning, we'll have some outcome on the presidential election here. It's going to be a wild weekend.
Oh yeah, I'm ready for a hall pass. I'm going to go chop a tree down or ride a bike. I don't know which.
Sounds good, George Washington. Well, with that, we're going to go and let you guys get out of here, get back to work, finish up your day, and get out of here and enjoy your weekend. For Stuart Turley, I'm Michael Tanner. Thank you for checking us out on the world's greatest website, oilandgas360.com, Energy News Beat. We will see you guys Monday morning for our Weekly Rant podcast and in the afternoon for our News Beat.